Eric, former Assistant Secretary for Treasury, former Deputy Assistant Secretary for Treasury, former head of corporate tax at IRS. Couldn't ask for a better person to be here to talk about administrative guidance and the Tax Cuts and Jobs Act. And Eric, you worked for Don Lubick.
Don Lubick hired me. I'm eternally grateful. In 1999, Don hired me as a senior advisor in the Office of Tax Policy. And I stayed there for almost 10 years.
And I heard a few minutes ago that Don said it was the best hire he ever made.
That's very kind. Thank you.
But you have a ton of experience in administering tax law, and now you're in the private sector, have a slightly different perspective on things. But one of the important things I think about administering tax law is to figure out who's involved in the process and how do you go about weighting the different participants in the process. Do you have some thoughts on that?
There are so many stakeholders in this process. We're going to spend our time this morning, I think, talking really about the nuts and bolts of the regulatory process. The way I look at the regulatory process, there are really four very important aspects of it. First is the policy, the substance of the rules that you're going to write. And you have to decide, of course, what format it's going to be in, whether it's going to be in regulations or notices or revenue rulings. But the policy, the substance, of course, is extremely important. Secondly, of great importance is the administration. You don't just write rules, they have to be administered. So part of the process is that you have to understand how it might be administered. And of course, this requires a lot of coordination with the IRS. Third, there are many different procedures that you need to carry out to, for example, to get a regulation out. And just to list some of them, the Regulatory Flexibility Act, the Paperwork Reduction Act, the Congressional Review Act, the Administrative Procedure Act, and of course there are always issues of authority under Chevron and Mayo. And then fourth, which I think we'll talk about a lot, is all the various stakeholders. There are so many different stakeholders in the guidance process, and that of course includes the public, and of course includes others like the Hill. So those are I think the main areas of the focus. They all need to be taken into account, and there are many, many different stakeholders. Do you want me to go into?
Sure. Why don't you just tell us who the stakeholders are?
What I did was every single participant in this process, and that's in the regulatory process, that includes the IRS as well as the Office of Tax Policy, and includes many, many other people. And each person has a web of relationships. There are so many participants in this process, so many cooks in the kitchen. And every single person involved in this process has a web of relationships that he or she has to deal with. For example, when I was at the IRS, I ran the corporate tax division. And running the corporate tax division, I created what I call hub and spokes. So the individual, me in this example, had to deal with all sorts of other people when I was at the IRS. For example, the commissioner's side, dealing with those people who administer the law. Had to deal with other divisions like pass-throughs or financial institutions or products. Had to deal with the chief counsel, deputy chief counsel. Had to deal with the field part, the field litigators who might have to deal with a regulation. When I was at Treasury, it is a different hub and spoke.
Bigger wheel?
It's a much bigger wheel. And I identified at least, and I have a little drawing here, I identified at least 10 different kinds of stakeholders in the regulatory process. So writing regulations is not just sitting down in a room with a few people and sitting at a computer and typing out a regulation. It is a long process of interaction. And the interaction is extremely useful. That's how you write a better regulation. That's how you do better tax policy. It's instrumental to trying to get it right. And all these players are very important, and all these players contribute a lot to the process.
So I heard a lot in the first panel. We were talking about talking with staff on the Hill, or talking with lobbyists, or talking with practitioners. This is a way to get a sense of what the issues are. Are those all parts of your wheel?
Absolutely. Let's first start. I'm going to start with the IRS, because in any kind of guidance, the IRS is a partner, a very close partner. And what's interesting is
to Treasury.
A partner to Treasury in the guidance process. The IRS folks often have a lot of institutional knowledge. They have knowledge of issues of administration of the law. It is incredibly important to interact very closely with the Office of Chief Counsel and the Commissioner side with respect to guidance. One perfect example right now is on the international provisions, which are right now the highest priority in terms of guidance with respect to the Act. And of course, the ACCI, the Associate Chief Counsel International, Margie Rawlinson and her team are very much involved. And they have experience of years and years and years of dealing with these issues, like on foreign tax credits or other issues that are related, Subpart F, that are related to these rules. So it's very important to interact very, very closely with them. Also, and that's all the divisions, like 199 Cap A, which is the small business deduction, is going to require interaction with the pass-throughs groups and many other groups at the IRS. Again, they have lots of institutional knowledge and experience. Also at the IRS is the commissioner side. The commissioner side is very important. Again, it goes back to this point about administering the law, how the law is going to be administered. For example, forms and publications. You got to deal with the folks in forms and publications with respect to guidance, because that's where the rubber is going to meet the road when people are starting to fill out the returns, particularly on the individual side. And I got to tell you, the people that do the forms are amazing. How you translate an internal revenue code that is this tall into forms and publications, then people can read and hopefully understand. It's a very important job. And I always thought, among the people that I admired, first I admired the legislative drafters on the Hill. Working with legislative drafters like in the 2004 Act, being in some of the drafting sessions, you're just amazed how much they know and how they can draw on different parts of the code. I also have a lot of admiration for the people who do the forms and the publications, because they have to translate this stuff into things that ordinary taxpayers like me can understand. And also the systems. The IRS has to work on systems. With the IRS's limited budget, the IRS has to work on technological systems to help administer this. And that's all very important. That's all very important and a big part of it. So the IRS, I put being extremely important. Second, moving around my wheel, at Treasury, of course, what I call the front office. Okay, that would be the secretary or the chief of staff. They have to know what's going on. Now, you have to give them the heads up as to what the Office of Tax Policy is doing, the big issues. Let them understand the big issues, make sure it's consistent with the policy of the office. And it may be the secretary may be interested on particular issues. It may be more that you're dealing with the chief of staff, and it's going to vary. All these things that I'm discussing are going to vary depending upon the administration, depending upon the individuals, their personalities, and on the particular issues. Yeah. So the front office is critical. Second, third, you got to deal with the general counsel's office. The general counsel's office plays an incredibly important role in all of this, because the general counsel's office sort of has the big picture view of what's going on in Treasury and in the administration. And the general counsel's office can be extremely helpful to give you guidance, to give you good practical guidance on what effect your guidance is going to have. Then you got to deal with other offices in Treasury. For example, domestic finance could have an interest in what you're doing. I had the privilege for many years to be working on the New Markets Tax Credit. And New Markets Tax Credit was run pretty much out of domestic finance.
Largely as a spending program.
Yes, I'm looking at Chris Smith over there, who knows well that, and Chris was in the Bush administration, and he knows well that domestic finance was a big player in New Markets Tax Credit. So you got to deal with other offices. Then, extremely important is public affairs and legislative affairs. During my time as assistant secretary, we coordinated extremely closely with both public affairs and legislative affairs, even regarding the guidance process. Public affairs, because public affairs is your link to the outside world, and they are sensitive to what the reaction might be. They are incoming for communication, outgoing for communication, so working with public affairs was extremely important. Leg affairs was, of course, important to deal with the Hill. The Hill is a very important stakeholder in all this. And leg affairs, again, plays a very important role as a communicator, but also as a buffer. I always appreciated when I had a buffer of some sort, whether it was public affairs or legislative affairs. Then, of course, the public. The public could be big business, small business, individuals, the public at large. And you have to understand the issues that you have and what effect it might have. And again, it's all about communication. All of these roles are about communication with all the various stakeholders. And it's very important throughout the process to listen to all the stakeholders, because each of us comes from our own paradigm, from our own framework, and to listen to others and hear what they have to offer to the process is extremely important in trying to get out good guidance. And then you can't forget foreign countries. Now, generally, on all the domestic stuff, I didn't have to deal with the foreign countries very much. But, for example, these international provisions, I think there's going to be a big concern by foreign countries. And keeping foreign countries in the loop, having to deal with the OECD and the European community is going to be extremely important. Also, the WTO. The question is whether has been raised, whether certain various provisions here are necessarily, like the FDII, the FDII, is consistent with our various obligations. So that's going to be an issue.
Before, right?
What'd you say?
You've lived through some of that before.
I've lived through some of that before. And the question is whether we have enacted, the contention would be, though I know the Hill considered this and considered it very closely. We had previous experience with DIS, FISC, and ETI, is whether they're illegal export subsidies. So that's going to be a question that I'm sure the legislators took into account and Treasury has to think about. And also the Hill, you've got to think about the Hill. I know there's been coordination with the Hill regarding this bill, a lot of conversation with the Hill about what they were thinking about, and that includes joint committee. It includes the Senate Finance Committee staff, which is going to be very important in this bill because it was largely a Senate Finance Committee bill. And it also includes the Ways and Means Committee staff. So there's got to be a lot of coordination there. And then the 10th stakeholder, and I'm sure I'm forgetting some, is OMB, the Office of Management and Budget, the Office of Information and Regulatory Affairs. The question is what role OIRA plays and OMB plays. My experience dealing with OMB was largely in the budget, the annual budget, whether it's a green book or a blue book. I can't remember what color it is now.
Depends on the administration.
It depends on the administration. Sure. But the revenue proposals, exactly. Dealing with OMB, I dealt with OMB in the budget and isolated issues. And now there's a discussion of what the role of OMB will be going forward, and we can talk about that. More. So those are all the different stakeholders. So you think writing a regulation is so easy, or writing other forms of guidance is so easy. It's not so easy. And a large part of the job is not only think of trying to get the rule right, it's also trying to learn as much as possible and communicate as much as possible with all the stakeholders in order to get the input and to think about that input and try to write the right rule. So that's a long answer to a short question. But what I wanted to convey was the nitty-gritty of the process of writing guidance. And it varies, again, whether you're doing a regulation, whether you're doing a notice, whether you're doing revenue rulings. And then there's guidance that the IRS does on its own. We cannot forget that there's guidance, informal guidance, that the IRS does on its own. For example, the private letter ruling process that goes on at the IRS. Now, a private letter ruling is only effective for the taxpayer that it involves. But on the other hand, we practitioners, we read all those PLRs and we try to figure out which way the IRS is going. There are also internal things like field service advice that's given on issues in controversy. There are also a generic legal advice memorandum that the IRS writes. And you have to understand that's all in some ways part of an informal guidance process that all of us on the outside, we look at very closely and very carefully to try to understand which way the law is going. So it's not easy. A lot of players, a lot of the job is working through the process to try to get the right result.
Okay. So in my research for today, I found a quote from you that said, the regulatory development process is like an elephant going through a snake. What exactly did you mean by that?
Well, what I meant by that, and I think, it was at a conference earlier this year, I think I said that. What it's really all about is the guidance process is very important. The output of the guidance process is very important. And what it requires is the participation of high-level officials at the IRS, including the chief counsel, the Treasury, the deputy assistant secretaries, and the assistant secretary, to sign off on all of this stuff. Because, one, all of this stuff has widespread implications for many different kinds of taxpayers, and there has to be consistency in approach. And therefore, you have many, many people, both at the IRS and at the Treasury, developing this guidance, but ultimately it needs to be signed off by those people who are higher in the chain. Mm-hmm. And so various parts of the guidance, you can't just say, well, we'll just let you do this guidance and go off on your own. It all has to be part of a whole. And therefore, there are many participants in this process, but ultimately it has to be signed off by folks who are in more senior positions. And just so you understand the process a little bit more, how it works, the IRS has the Office of Chief Counsel. It also has the commissioner's side. The Office of Chief Counsel has lawyers in branches that report to the Chief Counsel. What happens is, and Dana referred to it on the last panel, how the priorities are selected. You start by picking the priorities. And the PGP, which is the guidance plan, every summer there is a discussion of what's going to go on the guidance plan. As Dana pointed out, the guidance plan starts on July 1st, basically, and goes to the following July 1st.
But updated quarterly now.
And they're updated.
And what's, exactly.
Exactly. There are 18 projects as a result of tax reform that have been added to the PGP. And that sets the priorities for the Office of Chief Counsel and the Office of Tax Policy. Then for each priority, you have working groups, and there'll be a working group from the IRS along with the Treasury people. Just so you understand the numbers, at Treasury, there are about 90 to 100 people in the Office of Tax Policy, about evenly split between the economists and the lawyers. And just as a generalization, the economists often know as much or more about various provisions than the lawyers do. For example, on the individual side, I always found like things about earned income tax credit, low-income housing tax credit, things focused on individuals. The economists are an incredible resource in addition to their economic understanding.
No post-Treasury market for attorneys in earned income tax credit work, huh?
There are a lot of valuable things that... This is very important stuff. In any event, there are working groups both at the IRS and Treasury. Treasury, it's generally 1 or 2 or 3 people, because the staffs, for example, of the International Tax Council is like 10 people. The Office of Benefits Tax Council is 5 or 6 people. At the IRS, the international division probably has 50 or 60 or more lawyers. And so they work in teams. Generally, what happens is they identify the issues. They have lots of meetings. They create drafts. They brief the issues up the chain. Generally, decisions are made on the big issues. The drafting teams, which is often the IRS folks working with the Treasury folks, create drafts of these things, and they work their way up through the chain. So there's a whole process of creation of this. And then what happens is either through individual briefings or joint briefings, decisions are made. Often the chief counsel, the assistant secretary, and the deputy assistant secretaries are involved, and the decisions are made, and the guidance is drafted. And it goes through multiple drafts with lots of inputs from all the stakeholders.
So we heard at the previous panel talking a little bit about the priorities that Treasury and IRS should have on the for guidance coming out to implement the Tax Cuts and Jobs Act. Well, what's your sense of the top priorities for that guidance?
Well, I agree generally with the priorities that they have. What I find so very interesting about this bill is a very instrumental, fundamental change to our international tax provisions. And I was involved. I had the opportunity to participate somewhat in the 2004 Act, which had, in fact, reminiscent provisions. I mean, there was 965, 199. So, this is deja vu all over again. For 965, Treasury and the IRS were involved in writing notices about 965. They never did get regified. That
965 was...
That's right. Barbara was the lead on the 965.
Yeah. And what was Section 965?
965 was the elective repatriation provision. And
so a repatriation holiday in 2004, and now a deemed repatriation.
Exactly. Now it's mandatory. Back then it was elective. And a lot of the issues were there were limitations in the statute about what you could use the money for. And that's really what the core of the uncertainty was about that. And so there were various notices about what the money could be used for. And we can have a whole discussion about the success or not of that provision in terms of reinvesting those funds into the U.S. economy. And Section 199, which was the domestic production deduction, was also in 2004. But one difference between 2004 and not, when we did guidance in 2004, and as Barbara could attest to, it did not consume the entire guidance process. It was a smaller bill. Therefore, there are these selective projects that were worked alongside all the other projects in the guidance plan. I would say now that this current bill is eating up a whole lot more resources, and understandably so, because this is a much larger bill.
And a top priority for the administration to
Absolutely.
get this implemented in a way that is along the lines of what the intent was. Right?
Oh, no, it's very important. I mean, there are a number of things you have to take into account. And you asked me what my priorities would be, the same that I think that the administration has selected, 965, because 965 is this year. 965 is the mandatory repatriation. You got to do that. You got to do it quickly.
And companies need to know how much they need to bring back and when to pay it over.
Exactly. I mean, there are a lot of complicated issues. You got to know how much you owe.
Even you have to know what's cash and what's non-cash.
You have to know what's cash. You have to know what's non-cash. You have to know what the amount, the total amount that you need to bring back. You have to have rules about when you have to pay the tax, on and on and on. And, you know, you've seen the notices. There have been 3 or 4 notices already. At some point, they expect to put them in proposed regulations, which is going to be perhaps 100 or 200 pages long just on this one provision. Others are guilty. The guilty provision, which is the global intangible low taxed income provision, which some say is really a minimum tax. In some ways, that is going to be, that's a bear. There's a lot of complexity there. The BEAT, which is the base erosion and anti-avoidance tax, that is the denial. In essence, that's the corporate alternative minimum tax was repealed, but in essence, the BEAT is a corporate alternative minimum tax. What it does is it's an alternative tax base in which you add back certain outbound payments to related parties that are deductible to the payor.
So the beat goes on.
So the beat goes on. That's right. I live. Is that a Sonny and Cher? I live in Sonny's old house. So just a connection there. Section 163J is going to be very important. That's the limitation on interest deductions. And, of course, 199 Cap A. And in the prior panel, there was a discussion of 199 Cap A, which is the deduction for pass-throughs. You know, and there was that whole discussion in the last panel about the timing of how fast the guidance has to go out. Yeah, that's an important part of the decision-making process for the Treasury and the IRS, because in determining what the flavor, what kind of guidance you're going to put out, you have to take all sorts of things into account. And some of the factors you have to take into account when you're deciding, okay, I decide this project's an important project. We got to do this project. Well, okay, we're going to do this project, but what form is this project going to be in? And so I think of various factors that one has to take into account in deciding what this project is going to be. And I have at least 4 factors I would take into account in deciding what form this project is going to take. First, and most important, is notice and comment. Public comment is, you know, an essential part of our process. It's embodied in the Administrative Procedure Act. Treasury and the IRS, of course, take it as an extremely high priority. But public comment, putting out guidance that you have the opportunity to get public comment is extremely important. Now, on the other hand, but there's a tension between waiting for public comment and getting guidance out, because speed is very important.
And often you have like a 30 or 60, 90-day comment period.
Exactly. After you might put out an advance notice of proposed rulemaking in which you ask for comments. And then when you put out a proposed reg, you would have a comment period. Even a temporary regulation has a comment period. So, but the public comment you have to deal with also at times you want speed. And the last panel had the long discussion about, well, what's going to happen in the interim? How are taxpayers going to plan? Is this going to give the opportunity for aggressive taxpayers to take positions? So number 2 is how fast you want to get the guidance out. Third, another factor is the breadth of coverage. You got to decide, how broad you want this. You want it to be. Are you going to cover the world? Are you going to try to cover every single issue? Or are you going to cover the most important issues? And then finally is finality, a rule that applies. A proposed regulation is not effective. Now, the IRS has internal guidelines, internal memoranda that say that the IRS generally can't argue against its own proposed regulation if it's taxpayer favorable. But more generally, you want to have a rule that's effective. And so when you're deciding what guidance you're going to put out, you have to take all these things into account. And you have to weigh all these things. Now, it's decided for the 965 mandatory repatriation notices that the fastest way to do it is through a notice. In other situations, you use notices in emergency situations. Notices were used, for example, in 9/11, in Katrina, 2008. Notices because things had to be done immediately. There was no time to get through the entire process. So every single fact situation requires an analysis of what's the most appropriate way to do guidance. And then you have many choices of guidance. You could either do notices, for example, and notices generally say, well, this is what we're going to do, and this is what the effective date is going to be. They are, often try to be somewhat comprehensive, but most of the time notices are on individual issues. This is the most important issue. We got to get guidance out on this most important issue. We've seen it on 965, where they hit on very important issues. We saw the notice on 163J, which is the 30%, the limitation on interest deductions. And we saw there an announcement that 163J will be determined on a consolidated return basis. And so that notice is much more of a specific, a few particular issues, whereas 965 is trying to cover more issues. So you got notices. Mm-hmm. Then you got proposed regulations. And again, proposed regulations, you put out a proposed regulations. You ask for public comment. As you know, there's a public comment period for proposed regulations. But generally, that you got effective date issues. In a proposed regulation, generally the IRS and Treasury, if they're going to do a proposed regulation, they may say it's going to proposed to be effective immediately, but that can make a mess. Generally, with a proposed regulation, you seek to have it effective when it's finalized. Because if you have a proposed regulation, particularly in a really hard area, you put out a proposed reg and you propose it to be immediately effective, and you know that there's going to be lots of comments on it.
And you may want to change.
Yeah, you may want to change it, and then what do you do in the interim? So generally, a proposed regulation is going to be effective when it's finalized. Then there are temporary regulations, which are immediately effective. They're accompanied by a proposed regulation that goes with them. Again, a temporary regulation you're going to do because you got to do it because you need immediately effective rules. But you always run the risk that you're going to end up changing your temporary regulation. And then you go through the notice and comment process, and then you have a final regulation. And the final regulation is generally effective when it's finalized or for taxable years beginning after it's finalized. And those are some of your choices. You have revenue rulings. You could always do revenue rulings. Working with the IRS. All these things are done with the IRS. But a revenue ruling generally is a particular fact situation. And you're saying, this is the IRS position on a particular revenue, on a particular fact situation. Now, my personal view is that in terms of authority and binding effect on taxpayers, a revenue ruling is just a statement of the IRS position on a particular issue. Particular fact situation. A revenue ruling always starts with the facts, then has a discussion of the law. So a revenue ruling is a statement of IRS, in essence, the IRS's position. There's been debate in the courts about what binding effect it has. A regulation, now that has a binding effect of law. So these are just some of the issues that you would have to take into account in deciding what kind of guidance and among the different priorities of public comment, speed, breadth of coverage, and finality that you have to take into account in deciding. And you've got to deal with all the different stakeholders.
So it's almost like there are 3 or 4 things you want. You can't have all of them. So it's like speed, public input, comprehensiveness, pick 2.
Pick 2 or 3, and you do your best. But you do your best. You do your best on all of them.
Do you think that IRS Chief Counsel and Office of Tax Policy, do you have the necessary resources to develop and publish guidance on the Tax Cuts and Jobs Act?
The IRS, again, the IRS and Treasury could always use more resources, but again, because we have this process that requires high-level officials to sign off on it, that is always going to be a limiter in the process. And I'm not suggesting changing that because I think it's very important that the high-level officials know what they're, have an overall view of what's going on.
But we're short a couple high-level officials in the administration.
We are short a couple of high-level officials. But I also want to put an emphasis on the IRS and its resources. We've been focusing on the guidance process. To me, I think the important thing is that we got to be looking forward to is for example, the IRS. The IRS used to have over 100,000 people. Now it's like 70 or 75,000 people. The sheer number is not so important as the people that are there, that they have experience. And a lot of people are going to be retiring. So having people at the IRS who have the experience and the capability to administer this. So if you ask me the question about resources, that's, I think, the way I would focus more, is making sure that the IRS has the experienced people to be able to administer the tax law.
So we'd sign you up for a bigger budget for the IRS.
You'd sign me up for a bigger budget for the IRS? I would generally favor a bigger budget for the IRS, but of course, very much with this is what the money's going to be used for. This is how it's going to be allocated. We have service, enforcement, technology. And so it's very important that the funds be used in the best ways possible. For example, there is specific funds that have been allocated most recently about carrying out, executing the new bill. And I think that is very appropriate.
So how long do you think this guidance process for the Tax Cuts and Jobs Act is going to last?
It's going to go on. It's going to go on for years. I mean, these issues, many of these issues are very difficult issues. I think on the last panel, I think Dana made the comment that this is going to go on. This is going to go on for years. That for all these issues, it's an iterative process, and so there's going to be a lot learned, and so this process is going to go on for years. In addition, you have all the other unanswered questions that we have in the Internal Revenue Code. Our economy is extraordinarily complex. The Internal Revenue Code is extraordinarily complex, and so this process of trying to answer all the unanswered questions obviously is an unending task. For the short term, I think this bill is going to pretty much use up all the oxygen for a while. At some point, it will decrease, but again, it's going to continue because it is an iterative process. And then there'll be all the other issues that need to be resolved and that have been put aside for the moment.
One of the things that the previous panel talked a little bit about was the complexities in the U.S. economy and how different industries are have quite distinct characteristics. And one of the things I was struck by working in taxes, there's basically an infinite number of transactions people can enter into. But Congress passes the law, and it is a kind of high level, and it's up to Treasury and IRS to kind of drill down and cover all those possibilities. And here we have some big consequential changes in the tax code. It seems like you're starting from scratch in some areas to go on. There's not a ton to build on.
Well, I would also say for taxpayers, it's that way too. For taxpayers are trying.
Well, good for you.
Taxpayers are trying to figure out. Taxpayers are trying to figure out what this law means. I think we're in a period where, again, in the business community, the 21% rate is obviously a very important change, but all sorts of other stuff went with it. A 21% rate, we've moved sort of to a quasi-territorial system, and there's so many issues that taxpayers and their advisors need to think about in GILTI and BEAT, in 199 Cap A, and I think right now we're still in a stage where everybody's still trying to figure out what it all means. And so also Treasury and the IRS are trying to figure out what it all means. And I think what we're going to have is a period of time now, while all this guidance is being worked on, and perhaps even a longer period of time on areas for which there won't be guidance, in which taxpayers and their advisors are going to be left on their own to decide what this means. Now, whether this creates opportunity, there was a debate on the previous panel, whether this creates opportunity for aggressive behavior. All I'm going to say about that is there is uncertainty. Taxpayers are going to have to take positions. Advisors are going to have to advise them on the positions. In addition, you have to remember the financial statement implications of all of this. People are going to have to decide, for example, for publicly traded companies, what effect it has on their financial statements. And on your financial statements, you have to decide whether, for example, a position is more likely than not. And so the accountants are going to be involved in this. And I think we're going to have a period of time where taxpayers, their advisors, preparers of financial statements are going to have to be making decisions about what this law actually means.
And there'll be jobs for those people as part of the act.
I'm not worried about tax professionals.
I tend not to worry about that either.
Yeah, I'm not worried about tax professionals having something to do. I mean, it is very busy. Now, it can be dislocating. I remember in the 1986 Act, I was an associate in law firms in the 86 Act. I was not in the government. The biggest bill that I experienced in the government was 2004. But I remember the 1986 Act. It is dislocating for everyone. For example, I was a corporate and a partnership practitioner. As a corporate practitioner, general utilities was repealed. It changed all the rules about taxation of corporations and whether corporations can dispose of assets tax-free. And it led to the disincorporation. And so none of our clients wanted to be corporations anymore. Everybody wanted to be a partnership. And rules had to be written. Congress came back and put in 7704, which is the rules for publicly traded partnerships. There were all sorts of transactions.
87, 1 year after.
Exactly, 87. And then there were various general utilities issues that came up because then taxpayers figured out ways to avoid the corporate level tax. There were mirrored transactions. And so in 1980, which was the subject of legislation. And as Dana pointed out, we're still trying to figure out what general utilities repeal means. And it's now 32 years later, we're still trying to figure out what general utilities means. And it required regulations. We had regulations in the consolidated return area. And I won't bore you with the details, but there's a long history of these regulations called loss disallowance, which under the consolidated return regulations, you could basically avoid corporate level taxation. So Treasury wrote rules to prevent avoidance of corporate level taxation in consolidated returns. And all I can say is those regulations are still being modified to this day.
Still a reg project.
There is still an open reg project on loss disallowance. It's still going on. And one other thing about the iterative nature of the process, I can only tell you how iterative the process is. That is an example. There are a number of regulations that it took several iterations to get them right or to get them better. There was one regulation.
I had to work on some of yours.
You had to fix some of mine. Well, I could talk about some of the ones of mine that had. I left a large inventory for you, Mark, to fix. But there were regulations in the spin-off area. Congress enacted a law in 1997 about acquisitions after spin-offs. It took us, and it was basically a statute that codified a judicial doctrine. And so we had to write regulations basically trying to codify a judicial doctrine, what's called the step transaction doctrine, and we had to write regulations. And it took us at least 3 tries to get that right. That one, again, that is closed at this point. So the process is iterative. The short answer, it's going to go on. The question is whether these Jobs Act regulations are going to basically be the main event for how long? And then will the rest of the guidance that's necessary, when will it be done?
So one of the questions that came up in the last panel had to do with the Office of Management and Budget and its role in the tax regulatory process. You've been there. What do you think the role should be for the Office of Management and Budget in the regulatory process? Well,
there were a lot of great comments about the role of OMB. As everybody knows, there was a Executive Order 12866.
Everybody knows that.
Most of the geeks, and there are very few geeks in here. I'm the main geek. There may be a few others. But in general, tax regulations, they were still subject to it, but in a much more limited fashion. And now the question has arisen, well, should OMB play a larger role? Should this executive order be revisited? And what role should OMB play? As I said, all of this regulatory process, the point of my remarks is that it's all about communication. It's all about getting information from other people. It's all about getting input from others who are part of the process. The question is, what is the value? Where in that circle, that wheel that I have of all the different participants, is there a place there that OMB can add to what is already there? It's going to depend. It will depend upon what ultimately OMB's role will be. The question is, if OMB has a bigger role, would that role be actually to read the substance of the hundreds of pages of regulations that I know are going to come out on GILTI? Or is OMB's role going to be a role, for example, trying to figure out what the costs and benefit of this regulation might be upon the economy or on particular businesses? Exactly how you do a cost-benefit analysis for a regulation would have to be worked out. So that's one possible area that OMB might be able to play a role. Another area that might be able to play a role is coordination with the other agencies. There are a lot of issues that work across agencies, not all of them, but there are a fair number that work across agencies. I had the opportunity, for example, I had to work with the transportation on some issues, energy on some issues, because as you know, our tax code is actually a vehicle for social policy and economic policy. It's not just to raise revenue. So OMB can help coordinate that. For example, on benefits issues, issues having to do with benefits. You got labor, you got PBGC, you got Treasury, you got IRS. OMB can help coordinate that kind of stuff. So, and it also depends upon the people that you get at OMB. Are they going to be, senior people? Are they going to be more junior people? What experience are they going to have? So you have to take all these things into account. I mean, my hope would be that ultimately, if OMB does play a bigger role, that it's a role that is specifically defined to assist in the facilitation of getting regulations out, and that it's within certain time frames so that it doesn't significantly slow down the regulatory process.
Is there concern that would politicize the process, having a White House agency involved in tax regulation?
There are political people. That's in my wheel. There are political people that are involved throughout this process. So, the secretary is political, general counsel is political. I could just
the assistant secretary.
The assistant secretary is political. So, whether it adds another political layer, I think the important thing is to figure out how to add to the process. One, what would the role be, and how would it add to the process? And one thing is, also you don't want a situation where there's another player. You want to focus the public comments on Treasury and the IRS, as opposed to the public necessarily having another major player in the process through which they could make comments. I think the comment process, the notice and comment process, is better if it's focused, localized in Treasury and the IRS.
Okay. Let's switch gears for a little bit. Tax is an interesting career choice. How did you end up doing tax instead of something else?
Well, my professional baseball career was limited early. It was cut short because of my lack of height. But truly, I mean, it fits with my personality. I'm not a litigator. I'm sort of spend time thinking about issues, and that's how I got into the tax world. I always love the puzzles. It is like
a big puzzle.
It's language. It's the interpretation of language. It's like Latin. You study Latin, and every word has a relationship to every other word, and you have to understand the role that word plays in the context of all the other words. It's just like translating a language. It is a language, and that's what it's all about. And it's kind of cerebral and puzzle oriented, and you're trying to solve problems. And that's how I got into the tax law, and that's, I'm sure, how many of you became interested in the tax law.
But you also have an effect on millions of people's lives, businesses, aspects of the economy. So there's some gratifying aspects of that. You tell yourself at least that you're doing the right thing and you're kind of helping out in that sense.
Well, just like I would ask the same question of you. You were a very long time in the private sector, in the public sector, yeah. in the government. Now you serve in some ways in a public role, serving the public. I would ask you that question. I mean, there is a certain satisfaction from trying to do the right thing with other committed people in a team situation where you're trying to reach the right answer and you're trying to help, whether it's be individual taxpayers or business taxpayers. You're actually trying to give something back to the system, for those of us who've been so lucky to have that opportunity.
So it's like the most gratifying thing you did when you were doing in tax policy world?
The two most gratifying things and the two most challenging things was, number one was tax shelters. And number two was...
Stopping tax shelters.
Oh, absolutely. Okay. Absolutely. Yes. Okay. That was number one. And number two was the stuff in the emergency situations, whether it was 9/11 or Katrina or the financial crisis. I think those were the most gratifying. The tax shelter situations, I was in private practice, and I was so glad that Don hired me because it gave me the opportunity on an issue I had great passion about. And I was seeing what effect it was having on our tax system, just the insidious effects on the tax system, on advisors, on taxpayers. And
we had people at the time saying that you were a chump if you weren't part of the.
Oh, absolutely. No, I could spend a whole lot of time talking about some of the various situations, but I was given the opportunity by Don to come into Treasury, and that's one of the primary focuses I had, both in the Clinton administration and in the Bush administration.
I recall that I hired you because you were a Latin major undergraduate.
Exactly. It's all about language. It's all about words. But that was perhaps the most gratifying, and that was a multi-year thing. There were the regulations, the disclosure regulations. Mm-hmm. There were the listing notices. There were and the disclosure regulations was by 6011, 6111, 6112 by taxpayers and their advisors. Then there were the listing notices, which I thought were the most effective aspect of tax shelters, because it said, we know what you're doing. Mm-hmm. We're on your case. And it also required disclosure. Now, interestingly enough, most of the time, the listing notices stopped the transactions. There were some exceptions. For example, on the intermediary transactions, we put out a listing notice, and they kept going. And so we had to do the listing. And so then we did the listing notice 2 or 3 times because we didn't get it exactly right. It was overbroad. But nevertheless, I thought the listing notices and the disclosure regulations were very important, because not just for their substance, but for the deterrent effect. Also, Circular 230. Mm-hmm. And you talk about the stakeholders in this and the guidance process. Circular 230 regs aren't tax regulations. And so you think, well, the commissioner's side may not have a big interest in these kinds of things. Let me tell you, Commissioner Everson and I were literally face-to-face trying to negotiate over those regulations, about what went into those regulations in 2004, 2005. So on every one of these guidance projects, you have different stakeholders who play a different role.
Yeah, they get different weight.
They get different weight. And so on that one, I was dealing directly with the commissioner, trying to negotiate that, and then it took, we put it out, and it took several years for it to be, in my view, fixed and made more of a principles-based approach as opposed to a rules-based approach.
So one last question before we open up to the audience. When you're not doing tax stuff, what do you do for fun?
I'm in the mountains, or hiking, or I'm on my bicycle. Anyway, those are the things that I enjoy most, and history, of course, is.
Okay, well let's open up to some of the people in the crowd. See right here.
Bill West.
Get a microphone here. Please identify yourself and ask your question.
My name is Philip West.
Phil West.
Without being too provocative, going back to the OMB question, when in Don's most recent tenure, the Deputy Secretary and then Secretary often referred to the Office of Tax Policy as Treasury's treasury within the building, and what he meant by that was the Treasury Department in the cabinet was the department that got the most deference, and within the Treasury building, the Office of Tax Policy was the office that got the most deference. In thinking about how this is going to play out with OMB, to what extent does, in your view, to the extent people feel uncomfortable with that, to what extent is it just the tax guys thinking we're the smartest guys in the room, or to what extent is it that we are the smartest guys in the room?
I guess a partial reaction to that is I know I'm not the smartest guy in the room, and that's, in fact, why I put so much emphasis on learning from other people as part of the process. In terms of, I guess, as I said, with respect to OMB, I think it's going to all depend upon what role OMB is going to play. And if it's a role that helps in this process in particular areas, for example, coordinating with other departments, other agencies, I think that can be a helpful role. I think the most important thing is to make sure that whatever is decided is constructive for the process.
I guess as economists, one of the things you think about is comparative advantage. And who has a comparative advantage in interpreting tax law. And you'd have to say pretty much the people who live that and do it for a living and have done it for a long time. In some cases where there are large interpretive things. So for instance, Dana in the previous panel mentioned the debt equity regulations, where there hasn't been any guidance for 60 years on debt equity. Maybe there is a role for a disinterested observer to look at this and say, are you getting it about right? But for things where it really is just about interpreting the statute, it seems to me that you want to defer to the experts on that and make sure the process is done in an open and fair way, and then kind of get out of the way.
Yeah, I completely agree on the technical issues. The Treasury and the IRS have years and years of expertise. And so, yes, it's going to be very important that whatever this role is, it's very clearly defined. But I would think that on the technical issues, it should be left to Treasury and the IRS to make those calls.
Okay. We had a question in the back.
Hey, Mike Stavrianos. Thanks very much for your comments. Really enjoyed them. You mentioned some of the challenges that the IRS is likely to face having the resources needed to deal with the administration of the new law. If you were to look into your crystal ball at the year ahead and see the guidance that's going to be issued, the positions the taxpayers will ultimately take, what would you expect to be some of the biggest service and enforcement challenges that the IRS may face?
Well, let me go first.
Yeah, let Mark.
Yeah. So
I've done all the talking.
Okay,
Mark was an
I'll go
assistant
first
secretary.
and let Eric go second.
Let Mark take it from here.
But on the going forward, I mean, you have the filing season coming up in 2018, which is going to be just huge, right? It's going to be a lot of changes to the law for 150 million Americans who are going to have to look at their tax obligations and see, to a large extent, they're not what they were the year before. And most people doing their taxes kind of figure that next year is going to be like last year. And so there's going to be a big change for them. So in terms of the service side, I think the IRS is going to have to just get out in front and explain to people that here are the changes coming, here are the things you're going to see that are different. Really staff up on the telephones because people are going to have call in with questions. Also do a lot of outreach to practitioners and other kinds of groups so you can do things on a wholesale basis rather than a retail basis. But this is going to be probably one of the most challenging filing seasons that the IRS is going to have in a decade or more coming up, just because it's widespread change. And so that's one big area. I think we didn't talk about that in the previous panel because it's mostly focused on big structural changes in the law.
We discussed the forms, which are being
But Eric
done
did,
now.
exactly.
Yeah.
Yeah.
They are being done now, so it's a very complicated.
Yeah. Your turn, sir?
Well, I agree. So, I mean, some of the challenges are going to be, I think generally the challenges are going to be not just from this law, but generally the enforcement of the law. I mean, taxpayer service, that's the three things I mentioned: taxpayer service, enforcement, and technology. And you can go through each one of these and identify the challenges that are going to exist with respect to these. Taxpayer services, Mark referred to answering the phones. How do you communicate with taxpayers now? Doing it by phone, may be is very important for that touch, for taxpayers to feel that they have the ability to communicate with their government. So services are going to be very important.
But they may not have to be by phone, right?
They may not, exactly.
You could imagine transforming to a different way to
communicate. That's exactly right. At some point, we may transform to another way of communication. But it's very important that we have the contacts between taxpayers and the government, because taxes, as you know, are a taking of property from people in our country, so it's very important to have that communication so that taxpayers feel that they have the opportunity to talk to their government. So taxpayer service, being able to file returns, having a good filing season, those are very important. In the enforcement area, my personal view is to some extent you need to have a cop that's on the beat. Now, whether or not, you need to have a situation where taxpayers are reminded of their voluntary obligation to pay their taxes. But you do need that as well. And then technology. To me, technology is critical. Other countries, I am told, I'm not an expert on this, have various techniques, techniques that are ahead of us in terms of their technology. So all three of those things are going to be extremely important going forward. To a degree, the new tax bill changes that, but these are long-standing issues that the IRS is going to have to continue to focus on.
Okay, another question right next.
David Wentworth, taxpayers. Hi, Eric. Hi, Mark. David Wentworth, taxpayers for Common Sense and the World Bank. You mentioned the tax shelters in your past. What do you see as in effect, the new tax law probably opens up lots of new tax shelters. Can you comment on those?
Do you want to answer first?
I'll take a shot at it.
Yeah, I've been doing the talking.
Yeah.
You do something.
So the new tax law does a couple of things. One, I think it takes on the multinational side a lot of things that multinational firms could do last year, no longer available next year or this year. And so it just means there's going to be a whole new range of tax planning opportunities there that we're just beginning to understand what they are. And I think the previous panel talked a lot about some of the possibilities. Other types of things that you may see is on the special rate for pass-throughs. Big discussion in the last panel as to where the lines are going to be drawn there. And that's one where I think if the Treasury and IRS draw those lines tightly, less of a scope for tax shelters than if they're drawn more loosely or not drawn at all. A third area, and this is one I think Eric alluded to a little bit, was in the case of the limit on itemized deductions, state and local taxes in particular, you see state governments trying to figure out workarounds for this. And this is something we have seldom seen in the past, where you've had state entities, state governments trying to help their taxpayers find a way around the law. And that's a different new dimension of things.
Yeah, just to add with regard to tax shelter, there are lots of uncertainties. There may be aggressive planning. There are a couple of things, though, that I think are helpful in current situation. I worry about this issue all the time, about our tax system and collecting the taxes. A couple of things that are different than the 2000s tax shelters. Number one is in the 1990s, 2000 shelters, they were marketed shelters. There was a lot of marketing. And I don't see the extent, right now, I don't see the marketing coming back at the way the tax shelters were marketed in the 2000s, both individual and corporate. So I worry about the marketing aspect of it, but I don't see that trend yet. Now, individually crafted aggressive positions, that is always a possibility, and we'll just have to see how that plays out. That's number one. Number two is also on financial statements. I think the financial statement issues are much more in focus now for large companies, that the audit firms, basically, to give clean financials, have to conclude at a certain level, at least more likely than not, that a position works, so that there are also new inhibitors in the system itself. So I think those are helpful things. But yes, we have to keep our eye on aggressive behavior. But a couple of the circumstances I think are slightly different now. The one other thing I want to mention, David, you asked about tax shelters. I would also, the tax gap.
Yes, the tax gap.
The tax gap, right.
Scarring memory.
A scarring memory for me. My nomination got held up, just for those, got held up over tax gap issues. But the tax gap, reporting, compliance, non-reporting, these are very important issues, and they continue to be important issues. I would say between 83 and 85% of taxes are reported correctly, but you do have to be concerned about non-reporting, and those issues are old issues, and we're going to have to continue to face those. I don't know that the bill has necessarily any effect on that, but in terms of our overall tax system, we do have to worry about people's faith in the IRS, their faith in the tax system, their faith that their money is being used wisely. And so that's an issue that we can't put aside.
And one thing that the tax gap literature shows us is that better information reporting helps improve compliance. So taxpayers try to be compliant, but if you send the information to them and to the IRS, they really try to be compliant.
Right. There's withholding. Withholding is the most effective, the highest percentage. Then reporting is effective. And then where there's no reporting, that's where you get into the issues. Now, again, the tax gap is a very difficult issue because there have been various proposals over the years to tighten up reporting. And some of those proposals have been enacted and then repealed. So it's very, issues about reporting are very, very sensitive issues. But we're going to have to continue to face issues. Now, technology could help solve some of these problems. Technology can be part of the solution.
Well, in fact, one of the things that was passed probably when you were in the administration was reporting for debit and credit cards. And part of the idea is that you're moving to fewer cash transactions, moving more to electronic transactions, get that information reported. It's harder for the restaurant or whatever the small business is to say, oh, I didn't, my receipts are X when their credit card receipts are higher. So at least one step in a direction.
Right. No, exactly right. But these are very sensitive issues. But anyway, not just shelters, but tax cap is a very important issue.
How about one last question? Right up in
Joe. Joe.
Hey, on procedural issues, about 60 years ago.
Joe Gutentag.
Joe Gutentag. I'm retired. About 60 years ago, we established an international side at the Treasury and the IRS. So we had the domestic and the and the international. Since over the 60 years, now most of our biggest taxpayers are heavily involved in the international side, and the international and the domestic are more related than they were. Do you think we should be taking a look at how both the IRS and Treasury are organized in that area to see whether we could make some changes that might make us more effective? Sounds like a conversation.
Exactly. Dane and I have had this conversation. With globalization, for example, in private practice, no transaction that I work on fails to have international implications. Every single one has international implications. And over time, slowly over time, these offices have been working closer and closer together. My view is that at some point, just like on the commissioner's side at the IRS, the large business, the LB&I, the large businesses international is one enterprise.
Recognizing that pretty much all large businesses
are international. That's exactly right. And I think we are heading in that direction. The question is whether there are more steps that can be taken. One example is cross-border transactions, whether they should all be done in one office at the IRS on the lawyer side. Now, on the commissioner's side, there are what I'll call integration issues between the domestic and the international, but over time, those are going to have to be worked out, because I completely agree with you. Our future here in the United States is global, not limited to the United States. And in fact, this tax bill, the old tax law was 1962, reflected a completely different world where the United States was much more manufacturing, much more business here. This last tax bill reflects that our world here in the United States, whether we like it or not, has become global. And our institutions, I think, need to evolve to reflect that point.
Okay, well, thank you very much, Eric. Please join me in thanking Eric Solomon here today. That's great.
Thank you. Thank you, Mark.
Thanks for watching. Be sure to like and subscribe for more videos from Brookings.